Sure. Yeah. My focus has really been on silver. I mean, gold is, I think it's going much higher. I have an ultimate price target somewhere around $15,000 an ounce. And I think we could be entering one of those periods in silver where, maybe there's a year or so left before we get to way well into the triple digit silver area, which could mark a kind of a big blow off top. So this is silver versus gold. And you see silver just beginning to outperform gold. And I think there's a long way to go. As we just looked at that gold silver ratio in the long term, 62 to 1 was the silver squeeze peak. 30 to 1 was the peak in 2011. And then back in 1980, it was 15 to 1. So we're still at 75 to 1.
Notice that I'm not saying it is a firm breakout or confirmed breakout, just a potential. For us to get a confirmed breakout, we need to confirm the break by Monday having a close above 42.27, the high from Friday. On Monday, we must see a close above that. Watch on Monday. You want to see confirmation because if it confirms, your next upside target's around 60 to 62 and potentially even further than that.
Analysts, Steve Penny and Gareth Soloway lay out a robust roadmap for what may be unfolding in the precious metals market. Their focus remains firmly on silver, which has started to outperform gold after lagging for years. While long-term projections for gold stretch toward the $15,000 region, the near-term spotlight is shifting to silver's tightening structure and its approach toward triple-digit territory. The gold-to-silver ratio, still hovering around 75 to 1, is far from the historical extremes seen at the major peaks of previous cycles, suggesting considerable structural upside ahead. Early signs of a breakout are emerging, but confirmation depends on maintaining strength above last week's highs. If momentum holds, the following primary objectives sit in the 60 to 62 range, with the potential for acceleration beyond that as the market enters a more aggressive phase. Silver's leadership here signals a broader shift in the metals landscape with much larger moves still ahead. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
So where are we at in silver? Is it surprising? No, it's not at all. I mean, we've been expecting this. Anyone who's been bullish on silver for a couple of years now, $50 has been the magnet. I mean, $50 has had a magnet on it for a long time. And to think that this is like the end would be, I think, very naive because silver got to $50 in 1980, got there again in 2011. Well, here we are. Think of all the currency units that have been created since then. So yeah, nominally, we're breaking out to new all-time highs right at that $50 level, just above it today. But when you adjust for inflation, all the currency that's been created, all the fundamental case for owning silver, all the reasons have just gotten stronger and stronger and stronger. So I think we're near the beginning. Now you can measure where we're at in a bull market in terms of time or in terms of price. So I think in terms of price, we're earlier stages, but in terms of time, I think it could be the latter stages. Well, it's hard to let me add some color to that. We are potentially setting up for a parabolic move here in silver. Now, I don't want to be the guy who says, hey, we're going to have a parabolic move because strategy is greater than predictions and nobody can predict exactly what's going to happen. But I think the potential and the ingredients are coming together for a potential parabolic move in silver. And unlike gold, I think gold is entering the monetary system and it's more likely to have its kind of big move up and kind of plateau as it enters the global financial system. Silver is more likely to have kind of a big parabolic top and then that sets it up for a very sharp pullback. So in terms of time, things can happen really fast. Our minds are wired to think in linear fashion, but thinking in exponential fashion is not how our minds are wired. But when things go exponential, things can happen in a very compressed period of time. And I think we could be entering one of those periods in silver where, maybe there's a year or so left before we get to way well into the triple digit silver area, which could mark a kind of a big blow off top. It's still undervalued. And if you like, this might be a good spot to share a chart of the gold silver ratio. But no, I can keep talking as I pull that up. But yeah, silver still remains undervalued relative to gold. In fact, right now, this is one of the data points that suggests we could be moving into the next push higher here in the metals because the gold silver ratio, silver is just breaking out against gold. And the gold-silver ratio is breaking down against a key support level. Let me bring that up right here on my TradingView account. Okay, so you can see this is the gold-silver ratio going back to 1975. And the gold had been generally outperforming silver within the confines of this uptrend channel you can see here. I mean, it's kind of a loose uptrend channel, but you can see this pretty clear support. Back in 2011, the gold-silver ratio bottomed at 30 to 1. Then on the silver squeeze kind of peak back in 2021, got to a 62 to 1 gold-silver ratio. And just before today, we were sitting right at the lower edge of this support right here. Well, now with silver ripping higher today, and yeah, gold's moving higher too, but silver's outperforming. We just lost support here on this gold-silver ratio. So my point is that we look poised for an area where this looks to be an area where silver should begin to outperform gold, I think, by a wide margin. And kind of an interesting thing to do is flip the script a little bit and make it show silver versus gold. And when I bring up a daily chart here, this is the silver to gold ratio. And if you looked at this as like a stock, you would say, wow, this stock just broke out above its 200-day moving average right here. The 200 days just beginning to slow upwards. So this is the early stages of an uptrend. And then you've got this clearly defined uptrend channel. So this is silver versus gold. And you see silver just beginning to outperform gold. And I think there's a long way to go. As we just looked at that gold-silver ratio in the long term, 62 to 1 was the silver squeeze peak. 30 to 1 was the peak in 2011. And then back in 1980, it was 15 to 1. So we're still at 75 to 1. So if we get back to where we were in 1980, silver would outperform gold by a factor of 5, just to return to that 1980 ratio. And, you have Keith Neumeyer and probably knows a lot more about it than I do, but the geologic ratio of it coming out of the ground is like 7 to 1. So it's possible we even get down to, those kind of levels. So short answer, I think silver is poised to outperform gold by a wide margin, although it's much more volatile, obviously. Sure. Yeah. My focus has really been on silver. I mean, gold is, I think it's going much higher. I have an ultimate price target somewhere around $15,000 an ounce. But over the very short term, like the risk reward ratio is least favorable in gold to me of all the metals I track, specifically silver, uranium, gold, and platinum. I like gold a lot here. And I think if you don't own any, I would certainly want to kind of rectify that situation. However, as far as risk reward ratio over the next few months, I think silver and platinum are more favorable entry points. But here's this long-term chart for gold, and what a beautiful pattern this is. I mean, this big cup and handle. My measured move target was up, between 3,000 and 3,500. Well, here we are. We've exceeded my expectations by a wide margin for 2025. The RSI, RSI isn't an end-all be-all, but it's something to consider. That's this line up here. And right now, it's over 92. That's the second highest on record, or the highest on record. You have to go back to 1980. And, RSIs up there tend to be like a caution signal. It doesn't mean I don't think we're going higher, but there's no overhead resistance except for 43.98. That's the all-time high from back in October. Once we clear that, there is no overhead resistance. And when I bring up a daily chart here for gold, I put out to our members the other day, we had this little triangle pattern here. And I said, let me pull up the spot gold price. It's a little bit of a cleaner chart. There we go. Yeah, it's a little bit better. This little triangle pattern here. And I said, if we can manage to break above this red line right here, the path of least resistance becomes a retest of this 43.81 all-time high from back in October. So I do think we're headed for a retest here in the weeks ahead. Do we punch through it and, continue higher? My baseline expectation had been a little bit more of a sideways churn. So, I didn't think the most probable outcome was a rip higher here to new all-time highs in silver or gold before the end of this year. Well, silver's breaking to new all-time highs. Is gold going to follow suit? Remains to be seen, but I'd watch this 43.81 level. If we can get above 43.81, we could just continue higher in gold. But my baseline assumption had been more of a sideways churn here for a couple of months.
Steve Penny outlines why silver's breakout is not surprising, but simply the next phase of a long building cycle. They emphasize that $50 has acted as a magnet for years, yet when adjusted for decades of currency expansion, silver is only now entering the earliest phase of its real advance. Both highlight how price and time cycles are aligning. Structurally, silver remains undervalued relative to gold, but relational charts now show a decisive shift as the gold-silver ratio breaks down from key support. This behavior often precedes an accelerated upside phase, with silver beginning to outperform, a trend that can become exponential. They warn that parabolic moves unfold quickly, compressing years of valuation change into months, and this environment could carry silver well into triple-digit territory before a primary top forms. Let's get into the interview.
Taking a look at the chart here, we can see we had this wedge pattern of consolidation, right? So again, very clear low pivot here before this bigger bull run going back from basically September until late October. We then had the big top and the collapse, again, minor collapse. I wouldn't call it a collapse, but basically correction back down. And notice how, again, you have this great base creating these lows. You connect the highs, you create what's called a wedge pattern, right? And again, a wedge pattern, two trend lines that essentially are going closer and closer to themselves. Price gets tighter and tighter inside of them till it either breaks out or it breaks down. That is a classic wedge pattern scenario. Now, in the case of gold, per this past Friday, we got a strong close above the wedge pattern high trend line. Now, that does raise the probabilities. Remember, charting is all about probabilities. And so when you're in the wedge pattern, you're really watching to see, which way is this going to break? Which way is it going to tell me the next move is likely going to come? Once it breaks above and closes above like we got, it is a potential breakout. Notice that I'm not saying it is a firm breakout or confirmed breakout, just a potential. For us to get a confirmed breakout, we need to confirm the break by Monday having a close above 42.27. The high from Friday, on Monday, we must see a close above that. If that happens, it is a confirmed breakout. All right, now where will it go? Well, number one, you have minor, and I repeat, only minor resistance right here at 42.45 or so. The big level to watch, should we confirm, which will be very likely our upside near-term target, would be our double top. Now, again, we'll see, because if we get up there, yes, that's going to be resistance, but there is a lot of momentum in gold. All right, which again does dictate the potential for even more upside. But again, just to recap, what we're watching is this candle closed above the wedge. So it's the initial stage of a breakout. We want to see if we confirm on Monday with a close above 42.27. If that happens, a daily close above 42.27, it is a confirmed breakout. Should that occur, then the odds strongly, the probability strongly favors a test of the all-time high. Let's go into that hypothesis. So if we get a scenario where we don't confirm, but we stay above this level here, this trend line here, this wedge pattern trend line, then it's still open to confirm on Tuesday, Wednesday, Thursday, Friday. It doesn't really matter as long as we don't get a daily close back below this white trend line here that I just kind of marked up. Okay, so anything in this range is still, the potential is still there for confirmation of upside. All right, if we reverse and we close back inside of it, it essentially goes back to 50-50 of a breakout or a breakdown. You could even argue that the inability from a psychological standpoint of the inability to confirm the breakout and how it comes back in, if it does do that, that could actually even sway odds slightly to the breakdown side. So that's our gold analysis going into next week. Now, silver here, folks, this has had an absolute amazing move here. This was prior to Friday's breakout here, which is pretty remarkable here. What I want to do here is we can go to this chart here. This is showing the big push on Friday that took out the all-time highs. If you remember, we talked about just in my last few videos, I said, listen, if we break through this level, we're probably hitting $57 per ounce. That is your next technical level. Well, guess what? Just on Friday, we went to $56.53. So we're all basically almost there. Now, this is the kicker, though. So number one, yes, we closed above this level, and you could make a case for a little cup and handle, but it hasn't confirmed. Watch on Monday. You want to see confirmation, because if it confirms, your next upside target's around 60 to 62 and potentially even further than that. All right, so same thing like gold. The only difference with gold here is that gold is not at all-time highs, right? It just broke above a descending wedge trend line, all right, versus silver, new all-time highs, okay? So, but still, This was a double top. This was resistance. This is the big, look at this big parallel right here, right? I mean, incredible parallel here. And so, again, you got to really confirm above here. We have to confirm above this trend line to really be sure.
Gareth Soloway's latest breakdown highlights how both gold and silver have entered a decisive technical phase, with gold pushing above its wedge pattern and signaling the first stage of a potential breakout. He stresses that confirmation must come with a sustained close above the recent pivot, which would open the door to a direct retest of the all-time high. Silver, meanwhile, has already surged through significant resistance and printed fresh highs, stopping just short of the $57 technical level that has acted as the next magnet on the chart. The structure he tracks now resembles a classic continuation setup, where confirmation above the upper band could accelerate momentum toward the $60 to $62 zone. With trend alignment strengthening across metals, both charts suggest expanding volatility and powerful upside potential as we move into the next phase of this advance. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.